Every day, billions of dollars in goods cross borders: clothes, machines, food, technology. Behind it all is a fragile system where one policy change can shake the world. Trade is like a web: pull one strand and the network trembles. Prices rise, jobs vanish, essentials grow costly. It isn't just economics. Trade is influence, rewarding allies, pressuring rivals, shaping power. And when two major economies clash, the shockwaves reach everywhere. This is one of those moments, a decision with the power to reshape alliances and everyday life across continents. Trade isn't just about goods moving from one country to another. It's what shapes economies, it builds political alliances, and sometimes it creates conflict. Think about it. The phone in your pocket, the shirt you're wearing, even the medicines in your drawer, they're all part of this massive global trade network. And when that network gets disrupted, the ripple effects hit everyone. Now, India and the United States have been strong trade partners for decades. The US is India's biggest export market, buying everything from software services and pharma to garments and jewelry. India, in return, has become a reliable supplier that helps keep costs down in America. On the surface, that looks like a win-win. But here's the problem. There's been an imbalance for years. India sells way more to the US than it buys. And in politics, especially in America, that kind of trade gap is always a red flag. Fast forward to 2025, and that imbalance turned into a breaking point. On the 27th of August, the United States slapped tariffs of up to 50% on Indian goods. For India, that was a huge blow. Not just a small policy shift, a direct hit on its export-driven economy. So let's break this down step by step. What exactly are tariffs and why do countries use them? How has America used tariffs in the past? Why India and why now? Which Indian products are hit hardest? What happens next for ordinary people and the economy? And finally, how might India respond? What's a tariff, really? A tariff is basically a tax on imports. When something enters a country, the government can add a fee, usually a percentage of the product's value. So picture this. An Indian exporter sells a cotton shirt to the US for $10. With a 20% tariff, that shirt suddenly costs $12 for the American importer. That extra $2 doesn't go to the factory in India, it goes straight into the US government's pocket. Now, why do countries do this? To protect local industries from cheap foreign competition, to raise money, and sometimes to use as leverage, kind of like a weapon in negotiations. But here's the catch. Consumers end up paying more, businesses face uncertainty, and usually the other country retaliates. A look back. Tariffs in US history. America has done this before. Back in 1930, they passed the Smoot-Hawley Tariff Act. It raised duties on thousands of goods, hoping to protect US farmers and industries during the Great Depression. Instead, other countries hit back, global trade collapsed, and the depression got worse. Jump to 2018, Donald Trump put tariffs back at the center of US policy. Steel was hit with 25%, aluminum with 10%. Officially, it was about national security, but in reality, it was part of a trade war with China. India got caught in that storm too. In 2019, New Delhi retaliated by raising tariffs on 28 US products: almonds, apples, walnuts, even Harley-Davidson bikes. The message was clear: tariffs trigger counter-tariffs. The India-US trade picture, 2023 to 2024. Now, here's why India became a target in 2025. In the financial year 2023 to 2024, India exported $77.5 billion worth of goods to the US. Total trade between the two countries was about $118 billion, leaving India with a $36.8 billion surplus. That's huge. It means India sells way more than it buys. The top exports: engineering goods, $17.6 billion, electronics, $10 billion, gems and jewelry, $9.9 billion, pharma, $8.7 billion, ready-made garments, $4.7 billion. And don't forget IT services, globally worth $150 billion, with about 70% of that tied to North America. For India, the US is absolutely essential. For America, India is important, but not irreplaceable. That imbalance gives Washington leverage. Why tariffs now? So, why did the US pull the trigger in 2025? Reason 1, economic protection. American leaders argue that Indian industries get too many subsidies and advantages, making it impossible for US producers to compete. Reason 2, politics. The 2024 election was all about protecting American jobs. Swing states like Michigan and Ohio rely on manufacturing, and tariffs are an easy way to show action. Reason 3, the one not said out loud, geopolitics. Yes, the US wants to depend less on China, but it also doesn't want India rising too quickly as a replacement. By hitting India with tariffs, they slow down its growth while keeping it in check. How the tariffs escalated in 2025. And here's how it unfolded. April 2025, a universal 10% duty. Early August, raised to 25% on Indian imports. 27th August, full escalation, 50% tariffs on key categories. For exporters in Mumbai, Surat, Tirupur, and Chennai, this was devastating. Orders suddenly turned unprofitable. Goods already at ports were stuck, and millions of workers tied to exports faced massive uncertainty. The fine print won exemption. There was one small relief: pre-shipped goods were exempt as long as they were already on the way or cleared in warehouses before the 17th of September 2025. But that's just temporary. Every new shipment after that, full 50% tariff. The sectors hit hardest. Now, let's talk about the real impact, the industries on the firing line. Textiles and apparel, India exported 14.5 billion worth in 2023 to 2024, with 11 billion going to North America. This industry employs around 45 million people. A 50% tariff could wipe out orders. Gems and jewelry, almost 10 billion in exports. Surat's diamond polishers, Tamil Nadu's goldsmith, over 5 million workers rely on this. Luxury goods are the easiest to cut back on. Leather and footwear, globally worth 5.2 billion for India, a big chunk to the US. The sector employs 4.4 million people, often from vulnerable communities. A 50% tariff is brutal here. Marine products, seafood exports total about 8 billion globally, with a quarter to the US. Andhra Pradesh and Gujarat depend on this, but seafood is price sensitive. Buyers will switch to Thailand or Ecuador, machinery and engineering. This is India's single largest export to the US, at 17.6 billion. From auto parts to electrical machines, thousands of small and large firms are in the supply chain. For Make in India, this is a huge setback. The ripple effects: fuel, inflation, jobs, growth. This is where the pain spreads. Fuel. India imports 85% of its crude oil. Trade tensions push global prices higher, easily above $100 a barrel. That raises petrol, diesel, and everything else. Inflation. In June 2024, inflation was 5.08%. With tariffs, that could cross 6%. Families already struggling will feel it in groceries and daily essentials. Jobs. 45 million in textiles, 5 million directly in IT, plus 15 million indirectly, 5 million in jewelry, all exposed. Even small cuts in exports could mean layoffs. GDP. Exports are 21% of India's GDP. If exports slow, growth could drop by 1 to 1.5%. That's billions lost in output. What about IT and pharma? On paper, these sectors are safe. Pharma exports to the US were 8.7 billion in 2023, and India supplies nearly half of America's generic prescriptions. Not tariffed yet, but US lobby groups could change that. IT services, globally worth 150 billion, are tied to North America. Not directly tariffed, but stricter outsourcing rules or visa caps could squeeze them too. India's options. How might it respond? So what can India do? Option 1, retaliation. In 2019, India hit back with tariffs on almonds, apples, and Harleys. It could do the same again, but retaliation risks escalation. Option 2, diversification. India signed FTAs with the UAE and Australia in 2024, boosting Middle East exports by 15%. Expanding into Europe, Africa, and BRICS could cut reliance on the US. Option 3, BRICS alliances. BRICS expanded in 2023 to add Saudi, UAE, Egypt, Argentina, and Ethiopia. Strengthening ties here could offset US pressure. Option 4, negotiation. India can go to the WTO or negotiate directly, but WTO cases drag for years and bilateral talks are politically tricky. The bigger picture, geopolitics. This tariff fight is bigger than trade. It's about India's role in the world order. Will it tilt more towards BRICS and the global south, or keep balancing with Washington? The answer will shape global politics for years. So here we are. On 27th August 2025, the US imposed tariffs of up to 50% on Indian goods. For India, that means billions in lost trade, job risks, higher inflation, and uncertainty for industries that fuel its economy. But India has options: retaliation, diversification, and alliances. The question is, does this become a full-blown trade war, or will cooler heads step in? Because at the end of the day, tariffs are never just about economics. They're about politics, power, and the lives of ordinary people. What do you think? Should India strike back hard or play it smart and negotiate? For more videos like this, please subscribe to our channel.